Everybody, it's Charlie here with the Charlie Wills team. All right, statistics here for September of 2023. They are fresh off the press. Really not that surprising to the trends and everything that's going on or has been going on all year. So here's the breakdown. Everything combined, September kind of review, September of 22 compared to September of 23. When you blend everything together, single family home, multifamily home, etc., listings are down 15%, kind of the trend that we've been seeing. Average sale price up 8%, median up 7.6%. The one that's shocking probably the most is that inventory levels are pretty much identical. In September of 22, inventory was at 681 houses in Dane County. That's houses and condos. Today, it is 679 houses. So very, very similar. And that's kind of the trend. You'll hear this going on the rest of the way. If you're looking at just single family home, down 14% in listings. Sales are down again, as we knew. Again, when you don't have inventory, it's harder to keep up with those sales. The median price for single family homes up 11% in Dane County. So again, depending on where you live, that's a lot of the advice that we're giving. It's 5 to 10% over when you're in a competitive situation. And then the last piece of the single family piece is that inventory is identical to last year. 545, 545. So that's very fascinating to see that inventory levels are kind of holding right about there. And that's very similar to even 2021. It was 588 homes. So noticing that that's holding right about this time of the year. Look at just condominiums. This is the part that I think is a little bit fascinating. Sales are down 39%, inventory is down 17%, but the prices are rising at 7.3% year over year. So very interesting. And then again, same thing, same exact inventory thing that we've been talking about. Equal amount of inventory, and it's identical for the last 3 years. So 21, 22, and 23 in September, the inventory was 135 units. So that's fascinating to see. All right, and then you look at the whole market, right? Everything year to date. So January to end of September, we have statistics all in. Listings are down 18%, sales down 23%. Median sale price for the entire market, this is single family and condos, 6.2% up, and active residential listings 679. That's identical to last year at this time at 681. So again, very interesting that we're seeing the inventory levels that are that way. Now, stuff that I've posted on Instagram and that I'll talk about here is that there's a prediction between 5 and 6% for rent to increase. And we're already seeing that predictions are between 6 and 10% for the pricing to increase here on single family homes. Now, I think there's an opportunity when you have an interest rate market where we do, if you can find the right house, get into the house because it's going to cost you 6 to 10% more next year. So what does that mean to you, right? If you're buying a $400,000 price in Madison, you're now buying a $440,000 house. And what does that do for your difference in your mortgage, right? That $40,000 in your mortgage is quite a bit, right? It's $600-700. So when you're looking at that, what we're trying to help people is like, if you have a budget, if you look what you're doing right now, look at those factors. And we can't tell you what it is or isn't that you can't or shouldn't be doing with that money, but just at least think about what is going to happen to the valuations. Now, we have a problem with the inability for our market to continue to get as many houses in it new as possible, along with multifamily that's being built. I mean, we see cranes everywhere, we see building everywhere, but it just can't keep up with the demand. Madison is growing at a really high rate, and with that, we're going to kind of see those things. We don't know what the rates are going to do. We think they're going to hold for quite a while. They're probably going to start doing somewhat of a downfall as we get into next spring. If that happens, we're going to see interest skyrocket, right? Interest in meaning like buyers interested in buying property because the rates have fallen. Sellers are going to take advantage. I think we're also going to see if the rates drop, we're going to see a multifamily boom on purchasing that kind of property. Right now, multifamily is really expensive to leverage on that debt, at 7.5 or 8%. about $1,000 a month roughly is going towards interest, and that's really hard to eat when you're doing multifamily. So anyways, lots of stuff in the market. We're seeing still a good tick up, a lot of movement in the market, and I really think a lot of deals are going to happen here before the end of the year, and we're going to track that. We're going to say October 1 till the end of the year, we're going to watch how many accepted offers were this year, and we'll report to you guys at the end of the year kind of what that's tracking, and hopefully we see the same positive trend that we believe is going to happen. Okay, hope you enjoy the report. If there's anything else that we can give you for information, please let us know. Have a good day.